Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 3rd of June 2021 and we see gold and silver prices fall back quite strongly. So what's going on and should we be worried? Let's take a look. Firstly, just a quick shout out to our video yesterday entitled Morning Financial Update, Gold and Silver Down, Dogecoin Up. Though it has fallen slightly, Dogecoin today, but gold and silver even more so. And on Tuesday, Illuminati Silver invests or gambles in cryptos. Let's take a look. And we've placed links to both of these below. Now today, as at 21:21 GMT plus 1, gold is down $37 at $1,871. And silver is down 74 cents at $27.45 in spite of yesterday's falls. Analysts are placing the brunt of these moves at the door of a rising dollar, up 0.57 points, with the dollar index at 90.48, as the result of a strong ADP employment report and strong Services PMIs, both ahead of tomorrow's non-farm payroll report expected to endorse or complement the ADP report and the fewer jobless claims that were announced this past week too. Now, as we recall last month, the one report, the ADP and the non-farm payrolls, did not necessarily follow the other to the same degree, but we are expecting a good non-farm payroll report tomorrow, and so is the market, and therefore the downward pressure we're seeing on gold and by consequence on silver too. Now earlier in the week we had quite modestly positive manufacturing PMI reports, and we will cover these in more detail in our weekly update on Saturday. So technically gold, though down, is still arguably in an uptrend as the 10-day moving average crosses the 200-day moving average, but we will now encounter resistance below the 1900 level, closer perhaps to the 1894 level, and support to some degree at $1,850. Both short-term and medium-term momentum have turned negative, so a little consolidation is to be expected, and the 1850 level quite likely to be tested. The fear analysts are experiencing is that the Federal Reserve may taper its bond purchases sooner rather than later. Moving over to silver, it actually reached as low as $27.07 today, though it has regained a little composure, though still down. Technically, the 50-day EMA rests at $27.25, and this may again be tested before tomorrow is out, especially if, as expected, the non-farm payrolls are strong. But the 50-day EMA at $26 should supply more than adequate support. In some ways, for buyers, it may prove advantageous for silver to fall back a little, regroup, consolidate, and then break out to the upside as the global economy picks up. This may indeed prove, over the next few days, to be a reasonable buying opportunity. As we mentioned in yesterday's report, we took quite a few criticisms from members or people watching our channel asking us why we weren't commenting on a breakout for silver, which most of the pumpers have been pressing in the last few days, and frankly we simply did not believe or expect it would happen, so why suggest it in the first place? Without blowing our own trumpet, we look at our viewing figures versus the quality of price information and forecasts given and realise there's a huge mismatch here. More and more people seem to be heading off to those channels, promising them the gold and silver moon rocket, rather than follow those who, over 6 years, have been phenomenally accurate, with only a few minor deviations of relatively small percentages, compared with the hundreds of percent deviations from the more popular pumping channels. It is irritating, without doubt. It does seriously make one wonder what is happening to our society, where people prefer to hear fake news as opposed to reality, and want their egos rubbed and massaged rather than being slapped in the face with the harsh reality of life and true investment principles. Yes, even someone here criticizing us for daring to mention cryptocurrencies. How dare we, when we have warned for the past 2 years, and especially these last 6 months, that cryptos are taking away those liquid funds, much of which would have and could have been directed into precious metals, and therefore will not give us, while that goes on, the impetus to see precious metals rise as high as they could or should. How dare you criticize us for pointing out these alternatives? Go and bugger off to another channel that wants to inflate your ego and lie to you if the truth is too much for you to bear. Meanwhile, let's take a quick look at the Bloomberg Roundup as to what has happened to markets today. And if you still decide to remain with us, and we hope that you do, then please give us a thumbs up and subscribe if you haven't already done so. Meanwhile, thank you so much for listening, and let's have a look at the Bloomberg Article. Bloomberg Article dated June 3rd, 2021, updated 9:02 p.m. GMT +1. Stocks fall as jobs data outweigh Biden tax pitch. Markets wrap. US equities fell Thursday as investors digested a raft of economic data and a report that President Joe Biden may be open to a lower corporate tax rate than 28%. The S&P 500 rose from session lows after Biden was said to have pitched a 15% minimum tax on US corporations as a way to fund a bipartisan infrastructure package. However, the bounce was not enough to erase earlier declines on concerns the Federal Reserve may withdraw its support sooner than expected. An ADP report showed payrolls at US firms gained by the most in nearly a year, while additional figures on the economic health of the services sector rose to the highest on record. The dollar was stronger, commodities including gold and copper were lower, and treasuries fell. Meanwhile, the rally in so-called meme stocks included AMC Entertainment Holdings, Inc., began to fade. With US equities locked in a tight range for the past month, investors are on the lookout for any signs that the Fed might start to taper its asset purchases. St. Louis Fed President James Bullard said Thursday, the US labor market might be tighter than suggested by the current unemployment rate. Up next, all eyes will be on Friday's jobs report after separate data Thursday indicated strength was afoot. US jobless claims dipped below 400,000 for the first time during the pandemic last week. With seemingly all systems go on the jobs front, the economy is flashing some very real signs that this isn't just a comeback. Expansion mode could be on the horizon, said Mike Löwengart, Managing Director of Investment Strategy at E-Trade Financial. So what does that translate to? Likely more pressure on the Fed to make a move, perhaps sooner than many thought from the outset. The weakness in US trading followed declines in Europe and Asia on the back of mounting geopolitical tensions. Russia said it would eliminate the dollar from its National Wellbeing Fund to reduce exposure to US assets. Meanwhile, the US is set to amend an investment ban on companies linked to the Chinese military. The summer of uncertainty is on full display. Dennis de Besuchere, head of portfolio strategy at Evercore ISI, wrote in a note, 10-year yields remain anchored and there is pressure on the US dollar, but leading indicators are strong. Credit conditions are easy and market volatility remains low. That backdrop favors risk assets. These are some of the main moves in markets. S&P fell 0.4% at 4 p.m. New York time. The Nasdaq 100 fell 1.1%. The Dow Jones Industrial Average fell 0.1%. The MSCI World Index fell 0.5%. The Euro slipped 0.7%. The British pound slipped 0.5% and the Japanese yen slipped 0.7%. The yield on 10-year treasuries advanced 4 basis points, more than any closing gain since May the 12th. Germany's 10-year yield advanced 2 basis points to minus 0.18%, and Britain's 10-year yield advanced 4 basis points to 0.84%. West Texas Intermediate crude has little change, and gold futures fell 1.9%, the most since March 31st. End of article, and thank you for listening to this podcast. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.